Welcome to the Economy Magazine. I'm Benjamin Chong Alfares. All eyes are on Israel, at least so Israelis may think, as citizens cast their vote. While the actual result of the elections may remain unclear for some time to come, if we're to believe the polls, the issues are painfully clear to voters and politicians alike. With us in the studio to discuss Israeli voters' main economics concerns are Jack Smith, a partner at Gornitsky & Co., one of Israel's leading law firms, Eran Peleg, partner and chief investment officer at investment management firm Clary Capital, and I-24 News journalist Daniel Roth. Let's first take a look at the main issue facing Israelis, the unbearable cost of living.
The high cost of living, a social problem which caused thousands to go out into the streets of Israel in 2011, is still a major issue to be discussed in the wake of the upcoming elections. The issue became symbolized by the high cost of milky in Israel, where it is a national treat, compared to Germany, a country where young Israelis are moving to find lower living costs. 47% of Israelis are not satisfied with the current economic situation, according to a government survey. The discussion surrounding this major domestic issue has been at the forefront of the populace's mind, but current Prime Minister Netanyahu is criticized for focusing too much on national security and downplaying the economic situation. Meanwhile, voters are saying Yair Lapid has failed to bring any change after being elected as finance minister for his promises of reform. High consumer costs and import taxes, combined with a decline in gross salaries, makes the cost of living a hot topic. Only the election results will show how it plays out in the end.
Mr. Peleg, why is the cost of living in Israel so high? In a nutshell.
Yeah, lack of competition.
Lack of cartels?
Yeah, I mean, it's whether it's monopolies in certain areas, cartels, lack of competition, whether it's in many different sectors. Some of them are state-owned areas where the state controls, whether it's water, electricity. Others are, private sectors such as, banking, food, cars. So wherever you look, in many different areas, there's just not enough competition to bring prices down.
Is the government responsible for this, Daniel?
I think it depends on the sector, actually. When you look at a sector like cell phones, Moshe Kachlon of the Kulanu party, who's running, brought in competition and the prices shot down enormously.
Right.
On the other hand, all research shows that when you open up the market and privatize water systems, oftentimes the price goes up because it's something people don't have a choice about. So a lot of times it depends on whether it's a utility, something people absolutely need, or if it's something that people, a technology or something that people can do without theoretically.
Right.
Even if we don't, theoretically you can do it without it.
Of course. What should we expect from a new government? I mean, do we see change happening following the elections?
Well, I think if we do see any change, it will be slow and it will be difficult. Obviously, it depends on which government is elected and who's the Minister of Finance and who's the Prime Minister and to what extent the Prime Minister is backing the Minister of Finance in taking action in this area. But it's definitely very difficult because whoever is trying to increase competition within the market, needs first of all a lot of courage, but also mainly because he or she will be fighting very significant, whether it's political or economic forces.
Mr. Smith, what is your opinion on this? Do you see change happening following these elections?
Well, I think this is one of the main issues driving the public opinion today. And I think there was an interesting article in the paper yesterday which shows, we're in a deflationary economy now, so that means that the prices are actually going down in most sectors. But the article pointed out that where prices went up was real estate and public transport. And again, these are areas which are controlled by the government, and I think that the new government would be able to have a lot of influence with the right planning to bring prices down in these sectors.
And it presumably depends on what kind of government we have, whether or not there will be any pressure for that matter on the cartels. Is that so? Or is it basically something that is shared by all of the different parties out there?
Well, I think that we're going to see similar trends no matter who's in charge. There's not a lot of room for veering too far to the left or too far to the right on economic issues. So I think we're going to see slow, as we've been seeing in much of the Western world, slow processes of privatization that will sort of continue no matter if the slight left or slight right takes it.
Well, let's look at a different topic here now that is actually also very central to the whole situation here in economics in Israel. Israel has long been praised for its ability to innovate for lack of natural resources. The discovery of more than 900 billion cubic meters of natural gas has changed that reality. But how much of this find should go to the people?
Upon the discovery of trillions of cubic feet of natural gas off Israel's coast in the Mediterranean waters, the country's energy fortunes seemed poised for a major shift. Not only can these deposits cover much of Israel's internal energy needs, but a $15 billion deal to cover 15 years of gas to Jordan and potential talks with Egypt make export a major factor. But late last year, Israeli Antitrust Commissioner David Gilo announced that the majority control that American Noble Energy and Israeli Delek Group have enjoyed over the enormous Tamar and Leviathan gas fields would be broken up. Business interests have suggested that the move to regulate after the fact could leave Israel seeming unattractive to investors. Nevertheless, the move is intended to create competition in Israel's new and growing gas market. Meanwhile, the more recent discovery of the Ro'i field, with over 3 trillion cubic feet of gas, according to the Haaretz report, could be a sign of more to come. But the big question Israelis are asking is whether or not these major deposits will mean a boon for the public at large or not.
Mr. Smith, you focus on energy, on the energy sector at Gornitsky. What is your involvement in the Israeli sector in terms of the natural gas find?
Well, we're very much involved in the upstream development, the Leviathan field. And I think one of the biggest fallacies that has infiltrated into public opinion is that the public is not getting its fair share of the gas finds. The interest of the public is clearly it's a fiscal interest. They get over 60% of the tax revenue. And the public owns almost half the stock of Delek, of Ner, and Ratio, which have the significant owners of the fields. So the interest of the public is actually taken care of through the fiscal side of the gas revenue.
So you would say it's not dangerous, so to speak, that a few companies hold essentially this natural resource?
Well, I think this is no longer an issue because the outgoing administration has tabled a proposal which basically is going to force the Delek Group to sell their interest in Tamar. So they will be out of Tamar and they will be only holding the Leviathan field, and the only company that will have a cross-ownership interest will be Noble Energy. They are the operator of the fields. That means they're the technical company that professionally operates the field. And I think the government can find clever solutions how to manage their interests in both fields.
Okay, so what should the role of the antitrust authority be in this kind of a situation?
Well, I think the antitrust authority basically, in their decision, they caused tremendous amount of damage to the development of the field. They delayed the development for a year. That means the revenue of the public was postponed for a year. And I think basically the solution they put on the table, basically I think the parties involved are going to coalesce around that solution and agreeing and proceed to the development of the Leviathan field.
Daniel, I believe that you have a very different opinion on the situation. Can you clarify?
Yeah, I mean, I think that it's not necessarily a fallacy that the public's not getting their fair share. There's a wide breadth of the public that feels this way, that feels that this is a huge find. We're talking, like it was said in the report, trillions of cubic feet of natural gas, that the public is feeling from the subject before, the cost of living going up, and not finding any sort of immediate relief, certainly not immediate, maybe down the road, maybe the suggestion that it takes time to spur this into the public purse makes sense.
Energy costs have gone up tremendously as well. I mean, is that perhaps one of the reasons why people are concerned about this?
Well,
what would you say?
I think clearly, I mean, part of the discussion has moved away from okay, what should be the royalties or what should be the public share with, within the revenues of these companies, to, what should, natural gas prices be, which are the gas prices that are now being supplied into the Israeli economy and feeding through into, companies, businesses, and so forth. And there, I think, at the moment, at least, the perception is, and I think it's more than a perception, because people say this is backed by, information from, from around the world, that prices are currently high in Israel relative to what they should be. And the question is, how do you get those prices, which seem to be high, I'm not an expert on energy, but seem to be high, to a level which is more suitable or appropriate for, where natural gas is trading typically around the world.
Well, it'll be interesting to see actually how this plays out. But I want to go to the main story, so to speak, of the elections in terms of the discussions, which is, of course, the housing market. It's been central to much of the campaign, and the housing crisis, which could point to a much larger problem ahead, as some speak of a property bubble, and a mortgage crisis could also be waiting to explode. Let's see more in this report.
Housing costs have skyrocketed in recent years in Israel. It takes 147 months of average salaries to buy an average-priced home as of the end of 2013, according to the Housing Ministry, a rising figure as housing prices rose 80% between 2007 and 2014. Though the outgoing government has reported home shortages of between 100 and 150,000, the Bank of Israel suggests that number is lower, according to Israeli daily Haaretz, which reports that at the end of the third quarter of last year, 27,000 houses remained unsold, the highest number since 2000. Further, the supply of homes has gone up 83% over the last 5 years. It is unclear, according to the report, if supplies are indeed short or if high demand is the root cause, but housing costs continue to go up nonetheless. And while it's Israel's poorest communities, Palestinian citizens of Israel and ultra-Orthodox, that primarily suffer, it is a pressure that nearly all Israelis feel. Real estate in Israel is another sector marked by and marking the growing economic inequality across the country.
Mr. Peleg, does the current real estate situation in Israel pose a threat to the future of the country?
So I think yes.
Why?
Probably not for the reasons that you're thinking about. Yes, it is a risk. High prices and a potential collapse pose a risk to the financial system in Israel. But besides that, there are other issues which I think are at stake here. I think there's a social issue here, and the issue is causing increasing social tensions within society in Israel, and that's, I think, a threat to the stability of society. And beyond that, I think that high prices are, and this is a longer-term economic threat, are driving out, many young people from Israel, talented people that otherwise would have contributed to the economy here and economic development. So for all these reasons, I think the answer is yes.
Mr. Smith, would you say that there is a property bubble in Israel?
Well, I think, yeah, because the outgoing government wasn't able to decide on what would be the policy to bring down the pricing, so there was kind of a freeze in the market. There weren't any transactions, and now, in anticipation of the new policy, prices have gone up, and until new policy is in place, the price is going to keep on going up and up because people want to be able to sell as high as they can in a high market.
What needs to be done to solve the situation?
I think two guests pinpointed something very, very important that remains unsaid so far, which is that it's all of these intersections of all the things. It's also moral concerns, but it's also the stability of the economy, and it's also sort of strategic thinking about how a government plans economic realities. All of these pieces have to come together. There isn't a clear plan for housing. Nobody has
an easy fix either. It's not just that
I think there are things that can be done, and the government can do quite a lot. I think the government controls most of the supply of land in Israel. They can do something on that side.
Which is cited as one of the most important
which is one of the things.
But the people are already invested with mortgages, about 90% of which are unchangeable interest rates. Mm-hmm. Once interest rates go up, what happens? Nothing you can do at this point is going to necessarily make that a better situation, is it?
From that perspective, I agree. I mean, it's much more difficult. You have to deal with the current risks that are out there.
But to make the situation better for those who haven't bought a house
Yeah.
yet, so to speak, you're saying, let the government make land more available.
It's not just that. I mean, there are other things. Taxes, for example. Today, investing in real estate in Israel has clear advantages relative to investing in others,
Which is why
in capital markets more broadly.
investors are about 29% of the
Yes,
people
exactly,
who bought.
exactly. So
right
just
houses.
just fixing that and bringing that to a more equal level with other types of investments can, help stop the flow to some extent or slow them going into real estate.
Okay. So last comment, Daniel.
Yeah, I think it's just vital to understand this as a multifaceted problem that involves taxes, land prices, all across the board. Reform needs to be made.
Okay. Well, thank you very much, Daniel Roth, of course, from i24 News, Jack Smith from Gornitzky, and Eran Peleg from Canary Capital. Thanks very much, gentlemen, for joining us. The elections episode, thank you very much for watching. I'm Benjamin Channel Fires. Follow me on Twitter at Channel Fires. Send us your comments and join us again tomorrow for more on the elections.